Good afternoon, everyone, and thank you for joining possibly your lunch hour with us, or maybe it's a late breakfast. We're just really pleased that you are able to join us today. This is Susan Shockey, National Program Leader in Family and Consumer Economics with USDA NIFA. And I help work with all the land-grant universities, and it's a pleasure to work with the Cooperative Extension System. Today, the webinar is being sponsored by eXtension, Financial Security for All, Community of Practice, and that is a part of our Cooperative Extension System 24/7. We are very fortunate that we have such talented professionals in Extension, and that they provide face-to-face meetings and also a lot of social media programs. But this eXtension program provides the 24/7 and really reaches out to people throughout the nation and also internationally too. So the next slide I want to share with you is that we are pleased that U.S. Treasury is presenting with us today. We have some really special people presenting. We have Teresa, Teresa Jackson, isn't it? And then Andrew Zumwalt will be joining us today. I apologize. My my notes went flying here. So bear with me. So also I want to thank, we have a planning committee of Dr. Barbara O'Neill and Dr. Elizabeth Kish, who were both co-chairs of eXtension. And then also Andrew Zumwalt is our presenter today. And then also, I apologize, Teresa Jefferson will be presenting with Treasury. I also want to thank Megan DeFrance for working with us, who has been working with Treasury. First, I want to introduce, again, bear with me, my slides here. I want to say thanks to Elizabeth Kish, who is doing the Twitter chat box in the background. She has been very key in helping organize this program, and Elizabeth comes from Kansas State University, and then as I mentioned, I come from USDA NIFA. First, I want to introduce Teresa Jefferson. We had a last-minute Kimberly Reese. It was to present, and then she asked Teresa Jefferson to present, and so Teresa is a program policy analyst with the MyRA implementation team with U.S. Department of Treasury. Teresa is a member of the implementation team. She offers to Treasury MyRA as a new retirement savings account for individuals looking for a simple, safe, and affordable way to start saving for retirement. Teresa has worked with various early adopter employers and federal agencies who have chosen to share MyRA information with their employees who might not have access to retirement savings plans at work or find it difficult to get started saving. She works with employers to learn their needs and goals to build a customized, burden-free communication plan for each employer to effectively encourage their employees to open and fund MyRA accounts. Teresa, do you want to say a little bit more about who you are and anything in addition to what I just used as an introduction?
No, I think that pretty well covers it. That's been my focus for this year, this first year that we've been up and available for folks to sign up for MyRA. I've worked mostly with employers. And I've tried to help them come up with ways to share the information with their employees. We're starting to, reach out and talk to more folks that will help us spread the word. And so that's one of the reasons. Kim is our program director, and she had a last-minute cancellation. She had to go to the eye doctor today, so she asked if I could step in. So I think basically what you've said so far covers, my place in the team.
Okay, thanks, Teresa, and look forward to getting to know you more. So you know, group, we have been working with Treasury on organizing this webinar with about MyRA and what's important for educators to know since, I think, June. And we waited till November because the MyRA was released formally at that time. And Teresa, I'm sure you'll tell more about that. And then, it's now our place where we will help disseminate the information throughout the country. I'm also very pleased to introduce Andrew Zumwalt. Andrew has a BS in Business Administration with an emphasis in economics. And he also has a BS in Consumer and Family Economics and an MS in Consumer and Family Economics. Andrew has been instrumental in founding and growing the Missouri Taxpayer Education Initiative, a program that uses taxpayer assistance on a gateway to financial education. Over the past 6 years, more than 20,000 returns have been prepared at MoTax sites, and more than $20 million has been refunded. A large portion of these refunds have been prepared by students in the class. Andrew teaches personal financial planning 4188, which is a community agencies and volunteerism class. Andrew serves as a campus support for the state network of family financial education specialists, and he also serves on the board of the local student managed credit union, Tigers Credit Union. So I think you'll agree with me, cooperative extension educators, state specialists, that we have a nice lineup for you today, and I'm just really pleased that we are able to present this. So at this time, Andrew, before I turn it over to Teresa, do you have anything that you would like to add about your introduction or anything in addition?
No, thank you very much, Susan, and I look forward to presenting.
Okay, very good. So let's get started, and Teresa, I'll turn it over to you.
Okay, great. Thanks, Susan. First, sorry. I'm getting used to the little forward buttons. I think I have it now. So like I said, my name is Teresa Jefferson, and I am what we call a relationship manager on the implementation team with MyRA. And basically what that means is once someone, an employer, has decided that they want to share information with their employees, they want to tell their employees about MyRA, I work with them to actually implement that plan. We come up with communication plans, figure out what works best for the employer. Do their employees have email, or do they have a break room? A lot of different ways that we can communicate and spread the word with them. So we, I learn a lot about their business, and which has been really exciting for me over this last year. I just want to quickly go over the agenda for today, just so you guys know what to expect. So here's what we're going to cover. First, we'll take a look at the retirement savings landscape and some of the challenges out there. Then I'd like to tell you a little bit about MyRA and who it was developed for, and then actually go over the details of creating an account. And then finally, I'd like to tell you the simple steps that you can take to get involved with this as well. And then at the end, you'll be able to ask any questions if you have any. So let's just jump right in. As you know, millions of people in America are not saving for retirement. According to a 2015 Federal Reserve report, approximately 31% of non-retired individuals said that they have no retirement savings or pension whatsoever. Many people don't have access to a retirement savings plan at work, and that's usually what gets people started to start saving, is when they have a plan at work. And so that was one of the things that Treasury wanted to focus on, try to target or build something specifically for that group of individuals. And then these workers are often employees of a small business. For whatever reason, that small business is not able to provide a plan to their employees. And a lot of those are also part-time or seasonal workers, or maybe temporary workers. They only work a couple months out of the year, or they could also be contract workers. We also found that some that fall into this category are self-employed, or they also might be working multiple jobs. They could be part-time, and they could have 2 or 3 part-time jobs. And a lot of time, they're also the young adults. They're just getting started working, and the last thing that they're going to think about is saving for retirement, because that's way far away. But we all know the sooner you start, the better. And then we've found that, a lot of times the group that these folks work in, they're in retail or food service, leisure and hospitality, and then also business services, and then manufacturing industries. So that just, covers where we find a lot of folks that aren't saving for retirement because they don't have access to a plan. So not having access to a plan at work isn't the only barrier. There's other challenges that keep people from saving, and some of those include the cost of opening a retirement savings account, and then there's also the lack of knowledge when it comes to saving and all the different saving products that are out there. There are a lot of options out there in the marketplace, and to understand all that, especially we focus that some of them are the younger employees just getting started. They just, don't understand what's out there. And then some people are intimidated by all those different options. They just don't even know where to start. Where should I start making these complex, they're potentially complex choices. And then a lot of people are also concerned about, losing their money. They're not sure if it's a safe investment, and, they don't want to put their money away. And then, stories you hear about, folks that lose their money in their retirement plans. And then a lot of folks are actually concerned that they may need that money in case of an emergency, so they wouldn't have access to it if they would need it. So what we tried to do is to think about all those barriers that we all know exist, and Treasury, we came up with what we're calling MyRA, and that stands for My Retirement Account. It's a new savings account, retirement savings account that was developed by U.S. Treasury to remove these barriers and make saving for the future easy. It can help people take a step towards a more secure retirement in a way that's simple, safe, and affordable. So we feel like those three words, simple, safe, and affordable, addressed most of the common barriers that I talked about earlier. So who is MyRA for? MyRA was developed for people who don't have access to a retirement savings plan at work. Either their company doesn't have one as part of their benefits package, or they might not be eligible. So I talked about earlier part-timers. A lot of times companies have full-time workers and part-time workers. Full-time, and they have a retirement plan at work, but usually it may only be the full-time workers are eligible for it. So the part-time workers, if they continue to stay part-time, they're not eligible for that plan. MyRA is for people who want to start saving but aren't really sure where to get started, how to get started. So I just want to be clear, MyRA is not a replacement for an employer-sponsored plan. People who have access to that plan, they should use it and contribute to it to the fullest extent, because that's where they're going to get the biggest bang for their buck in being able to save for retirement. Really what we were trying to focus on with MyRA was this was meant for those who don't have access to the plan. We have actually found folks that do have access to the plan, but they've looked at MyRA as a way to also supplement their retirement plan at work. So it can be for anyone. It's really intended to help people develop a savings habit, build up some savings, and then move those savings into the private sector so they can keep growing their savings. So let's talk a little bit more about what specifically a MyRA is and what is the investment in the MyRA. So first of all, we didn't want to recreate the wheel. We didn't want to start with a new investment. So MyRA is a Roth IRA, and we felt like that was something that already had pretty well established rules. you know, that information is available within the IRS regulations, and, you know, we follow all those same rules, and they have all the same tax advantages of a Roth IRA. The contributions that are put into your MyRA are invested in a new U.S. Treasury savings bond that earns interest at the same rate as investments in the government securities fund, which is available to federal employees. So federal employees have a fund that is a safe investment. It doesn't lose interest over time. The value will never go down. So, you know, we just built a new savings bond that earned interest at that same rate. As I said before, as you continue to contribute and build up your savings, you can choose to transfer or roll over your MyRA into a private sector Roth IRA at any time. Our plan for the MyRA was to be a starter savings account, not an account that you will be able to retire on. And you'll see why when I talk about this last bullet here. Like I said, we wanted people to use this as a way to start building a habit in saving, and you know, get them comfortable with it and build up over time. So we put a maximum account balance on there of $15,000. So we all know that you can't retire off of $15,000, but hopefully by the time you reach that balance, you've built that habit. You have it in place, and now you're a saver. And then you can you know, transfer into private sector accounts where you'll be able to continue to grow your savings at more than likely more lucrative investment options. So like I said before, we have those three words, simple, safe, and affordable. MyRA was designed just for that reason, to make it make saving for retirement simple, safe, and affordable. And I'll say those words probably over and over again. People can open an account in a matter of minutes, online or by phone, so that's very simple. I think we're finding it's anywhere between 4 to 8 minutes to open your account. You just have to make sure you have a few key information with you when you start, and it's a very quick online process. You can set up an automatic contribution right there at the start. So once you set it up, you don't have to worry about that again, and you kind of forget it. One thing later I'll share with you, one of the individuals that I worked with, that was one of the things that was very attractive to her, is that she found it hard to save, but by being able to set it up right at the beginning when she opened her account, she kind of forgot that she had done it, and it was, you know, out of sight, out of mind, and she's surprised at how quick her savings had grown over time. Like I said earlier before, the account carries no risk of losing money and is backed by the U.S. Treasury. There are no minimum balances or contribution requirements. Savers can choose whatever they want to save, whatever fits their budget. I like to tell a little story about my son. He is a Domino's deliverer, and he's 22, and of course he's one of those that has never thought about saving. But, you know, because I'm working on this project, I told him about MyRA, and it took a little while. And he started with $5 coming out of his paycheck, and he was surprised at how quickly it grew. And he actually came back to me a few months later, and he's like, "Mom, I increased it to 25." So he was comfortable with that starting at 5, and then later he was like, "Wow, look at how fast that's grown. I think I can afford to put a little bit more in there." So he was the one that was in control. You know, what made him comfortable, and so that we find is, you know, something that would be very of interest to folks signing up for an account. And the other thing, too, that's really great is because it's a Roth IRA and the contributions are after tax, if you find out that you would need access to your money, anything that you put into the account can be withdrawn at any time without tax or penalty. So that's another reason why we, chose to go with the Roth IRA route, because we knew that was one of the barriers that folks had talked about. So Susan mentioned earlier that just in early November, we actually did what we called our public launch. We've actually been available for folks to open accounts since December of last year, but we've used this first year as kind of a learning year to just see what other functionality folks would like in a MyRA account, and just try to really get things right before the mass public became aware of it. So originally, what you would do is contribute to your MyRA from your paycheck from your employer, and so that's why we started working with employers to begin with. It was one of those kind of set it and forget it. It comes out of your check and you forget about it. But we heard, there were a lot of barriers there, especially in the areas that we were targeting. Some folks didn't have payroll, automatic payroll deductions, or, they still got paid by check. Or if their job did have payroll deductions, they were only allowed, 2 allotments. And so we quickly realized that we needed to add some more funding options. So just recently, in conjunction with our public launch in November, we've added expanded funding options that we think will make MyRA even more accessible. So now there are 3 ways to contribute: from your paycheck. Savers can set up automatic direct deposit to their MyRA with their employer. And then another way is from a checking or savings account. You can set up recurring or just a one-time contribution from your checking, savings, or other type of personal account. And then lastly, we have worked with IRS, and now you will be able to actually fund your MyRA account from your federal tax return refund. So at tax time, savers can direct all or even just a part of their federal tax refund to their MyRA account. So we're really excited about these new expanded funding options. So like we've said at the very beginning, we rely on partner organizations to help spread the word, and so that's why we're here talking with you today. We've developed a lot of messaging and materials that make it really easy for you to include in any of your messaging. Here are just a few of the examples of what some of our partners have done in the past. Wiser developed an original flyer. They used our messaging and then combined it with something that they were sending out: 10 reasons to say yes to MyRA. CFED added a blurb and a link to their our website on their resources page. America Saves wrote a blog post to show their support for MyRA, and so did the American Payroll Association. So what are some of the ways for you to get involved with MyRA? So on this slide, you'll see some various ways that you can do that. You can distribute MyRA materials either electronically or share printed copies. Share MyRA information on your social media channels. Include MyRA in any of your speaking engagements. And then spread the word and tell other organizations in your network about MyRA and encourage them to get involved as well. And then as you're doing that, if you hear of any success stories related to MyRA, someone that you've helped start to save, or someone that is saving with MyRA, we'd love to hear about those stories. And I'll share a few of the ones that we have so far with you in a minute. So along with our public launch in November, we also revamped our website. Some of you may have heard about us back in December. And if you'd gone to our website, it was fairly short and sweet. There wasn't a lot of information out there. That, we're trying to over time add more information about financial literacy, and just trying to really encourage folks to open accounts and fund them. Why is that important? So we've added. We wanted to make it a little bit easier for them to find more information, and then also easier for them to sign up. You're going to find a lot of materials out there that you can share in the partners and employers section on the website. And then there's a lot of FAQs out there for employers and individuals as well. And like I said, one of the things that we really wanted to do was make it very seamless in how to sign up. We added that basically call to action button throughout many pages. So maybe somebody wanted to read a little bit more to really get convinced to take that next step. They're going to see a sign up today button on that page. Well, maybe they want to dig a little bit deeper, but they'll still see a sign up now. So we really wanted to make it pretty seamlessly for them to actually sign up. So I talked about the resources that we have out there. We have things like a poster, we have videos, we have fact sheets. There's a lot of different things. One of the things that I find really helpful, has been helpful for my employers that I've worked with, is we have what we call an employee meeting toolkit. And we've actually even tried to take that same concept and build partner toolkits. But in those toolkits, we give intranet content. Almost, copy and paste and put it in your information. We have template emails that you can send out to folks. We even have a template presentation very similar to the one that I'm doing here today. And another thing that we've added also is we have some pages on the website in Spanish. So we're really excited about that. So what's next? We encourage you to join us in spreading the word about MyRA. You can do this at any time in the year, but we have identified some key times and themes that we think will resonate with the MyRA audience. And you'll see on this slide, the one that's coming up is New Year's resolution. You may already be planning to do something around this time, and so maybe adding MyRA into your messaging, it'll fit right in. We send out, we have an e-newsletter, so watch our e-newsletter for tips and things you'd like that you could use. And we also, like I said, offer suggested tweets or other customized assets or messages. And as always, we encourage you to come to us if you have any ideas. Like I said, we use this first year as a learning year, but we're always learning. We're always wanting to hear from our partners, our employers, and even individuals who actually come to our site and create an account. So here's one of the employees that I worked with. One of the businesses was Grady Wrights and Associates, and they're an insurance company in the Baltimore, D.C. area. Jada is just out of college. She worked in a very small business, 5 folks in this business, and definitely a company that was more family-oriented. The co-owners, co-founders just couldn't afford to offer their 5 folks, a retirement savings plan, but they knew it was important. So they were so excited when they heard about MyRA. And like I said, Jada was really excited that she could set it up, and after time she said she forgot about that little bit coming out of her check. And I went back maybe about 4 months after our initial visit, and she was telling me that she had logged into her account and she couldn't believe you know, how much she had saved over time. And one of the things that really, you know, also resonated with Jada was the fact that if she ever needed the money, you know, the money that she had put in, she would be able to get access to it. She said she still lived at home with her mom, but, you know, one day she'd probably want to, you know, move out and buy a place of her own. So in her mind, it was a great way for her to start that savings habit and build up a little bit of a nest egg. Another employee that I also worked with, the same company, Glenn's Garden Market, they're a grocery store in the Washington, D.C. area. And Audrey liked that the account was free and it didn't have any fees. She's like, you know, what she said to me is, if it's free, why not try it out, especially if it's going to help me out in the long run. She thought it was very easy to sign up. She said it took her like 5 minutes. And, you know, she definitely was encouraged by her parents. Her parents are lawyers, and, you know, she brought the information home to talk about it with them. But, you know, she's excited that, you know, one day she will be able to retire, and she's looking forward to getting in her RV and go. I was, you know, really excited to meet Audrey. So here's our contact information. You know, after today, if you have any questions, you know, please feel free to reach out at the phone number or at the email address. That's actually goes to our group of folks that work with the employers and partners. But, you know, they would be able to get you in touch with me if you wanted to talk with me directly. So I guess now, if anybody had any questions while we were doing the chat, I guess I could take some questions.
Teresa, I'm going to wait for questions at the end.
Okay.
So thank you very much. That was really a very nice overview. So I know that there's questions coming in the chat box. Maybe you might want to scroll and look at some of those before the end of the question session. But at this
time, I can do that.
Yeah, I think that would be the best. At this time, Andrew is going to explain how and keep this in perspective, that how the MyRA then will feed into other possible investments. And Andrew, we're really looking forward to your presentation, and we know you have a wealth of experience in this area. So at this time, I'm going to turn it over to you.
Well, thank you, Susan. So I wanted to talk about, thank you, Treasury, for that great kind of introduction into MyRAs. And I want to kind of talk just a little summary and then dig into some of the deeper details or some of the other considerations that are out there. And so you'll notice I have a plant there, and that plant will become meaningful here in a few slides. So we will, I don't know what the plant is. I searched Google for a plant image, found one on Wikipedia that was copyright free and was available for reuse, and so it looks like a good plant. So let's keep going. So a quick little summary of MyRAs. Basically, I think of a MyRA as a mini Roth IRA. No fees, no minimums to open or exist, so no minimum balances. One investment option and no risk, except for inflation. And even then, I have a little asterisk there, because the MyRA is invested in is the same investment characteristics as the TSPG fund, which I put a link to that in the chat box in response to a question Cynthia Crawford asked. And the G fund does try to, it tries to produce a rate of return higher than the rate of inflation. So the goal is to beat inflation, but there's always a chance that inflation will rise just quicker than the rate can rise on these investments. But in terms of other risk, like credit risk, it just doesn't exist because it's all invested in U.S. Treasuries, unless you think the U.S. Treasury is going to default. So that's a quick little summary of the MyRAs. And when I think about MyRAs, it is a mini Roth, but it's also this is how I think of it visually. It's like a starter tray for your investment. And when I say that, I mean that quite literally, because you might have noticed in the presentation, you can't have a MyRA indefinitely. One of two things can happen. Once you hit your max balance of $15,000, then you're going to have to move the money out. It's going to transfer to a private Roth IRA, or 30 years. So at some point in the future, there is a time limit, and just as your plants, they sometimes grow too big for the little starter trays, eventually that money is going to move into a private Roth IRA product and out of the MyRA starter tray. Now, when I thought about these MyRA accounts, I thought, well, why not just use a savings account? I mean, we can take a savings account and we can direct deposit money in monthly, or whoever the credit union or bank or other financial institution wants to work with you. Why not put money in a savings account? And really, it's a behavioral issue, I think. So by putting the money in a Roth IRA, you're actually making it harder to withdraw that money. Now, it is withdrawable. You can withdraw from it. So if you had trouble paying your bills, or if you had a large capital expense, you can pull your money out of your MyRA. But it's a little bit harder. You've got to probably jump through a few more hoops. It's not as simple as going to the bank and saying, I want the money out of my savings account, and then they give it to you. So it makes it just a little bit harder, and really that's kind of the use of inertia in your favor. I'll never forget, I was working with a client here at our Vitus site on campus, and I was helping her calculate what she should have withdrawn from her paycheck for her federal withholding. And I said, you've got plenty. You don't have to have anything more withheld. And she's like, no, you don't understand. I have to give money out of my paycheck to the federal government, and then when I file my tax return, I get a large lump sum back. But if I try and put it in my own savings account, I will take the money. It's too accessible. And I think that's kind of the same thing here. The money is a little bit more, it's a little bit further away from the individual. And so there's a benefit to that. Also, 2007, 2008, and maybe even a little bit after that, was a rough time in the market. There was a lot of ups, a lot of downs. Maybe people have some bad memories. So the no-risk option, I mean, absolutely no risk except for inflation risk, that really kind of may lessen the pain from investing. It may make it a little bit easier for someone to say, well, yeah, absolutely, I'll jump into that because there's no risk, and I'll earn a rate of return that actually, compared to a savings account today, I think the most I looked at, it was about 2.31 in 2014. That's pretty good compared to savings accounts today, even in the online world, where I think you can earn about 1% or so. So no risk option with a good-looking savings rate or interest rate, that looks pretty attractive. It also kind of has that government shine a little bit. And so I think people are more likely to invest in something that has that Department of Treasury burnish a little bit, you might say, on it. And the other thing I think a MyRA does is it lets you accumulate enough assets to merit attention from a financial professional. I talk to some of our Vita clients who come in, and they go to different financial professionals and they try to talk to them about saving and investing. And the first question is, well, how much do you have to invest? And the client says, well, not much. I'm kind of low income right now, but things are looking good in the future, and they just get turned away because they don't meet the requirements. Now, that's not all financial professionals, but it's definitely some of them. And so it allows a chance for people to kind of accumulate and not have to worry about all the little details when you're opening an account with a financial institution. And looking to that, I just had to do some research and say, well, why not just start a Roth IRA on your own? Why start a MyRA? And for one thing, there are some minimums. Vanguard there and Wealthfront, you have to have at least 1,000 in Vanguard, and that's to put in the target date funds. I believe it's 3,000 if you want to invest in other funds. And there's some annual fees with that as well, unless you choose e-delivery. Wealthfront has a minimum of 500, no annual fees, but they do charge asset under management fees. And then Fidelity and TD Ameritrade are kind of your discount online brokers. And they have no minimums to open a Roth, but if you want to open a brokerage account, then you're going to have a minimum. I think it was usually about $2,500, and there may be some fees associated with that as well. And it's interesting, as I was going through these websites, I consider myself financially savvy, but it wasn't very easy to find this information. I think one of the huge benefits of the MyRAs is it's all up front. There's no commission schedules that you have to go and read the very fine print that's an 8-point font, those types of things. So I think the MyRA is just easier to open, easier to understand. And so while some people may say, well, just open a regular Roth because there's all these, low minimums, but maybe it's not that easy. It's more daunting to someone who isn't financially savvy. Now, I'm not saying that you eventually don't move to a private institution. We know that because the MyRA is equivalent to a starter trade for our plants, we know we've got to move into the private world eventually. But hopefully by then we've got enough, the client has enough invested so that we don't have to worry about minimums and they can open an account and invest and then continue that periodic investing and helping grow that account. Some of the other considerations with the MyRA is the saver's credit on your tax return. The government will actually credit you or provide up to 50% of your contribution if you're below those bend points there of $36,500 for married filing joint, $27,375 for head of household, and $18,250 for everybody else, married filing separate, single, etc. So you can make a max contribution of $2,000. So if someone, let's say, is married filing joint and their income is below that AGI, they put $2,000 into their MyRA, the government will give them $1,000 back. And so that's, when I think about that, it seems like it's a 50% return to have that money come right back on their taxes. One thing I would say as a caveat here is if you have somebody whose income is a little bit higher but still eligible for the saver's credit, it might be useful to compare a MyRA contribution to a deductible IRA contribution, because I know there are some individuals who they prefer to put money in their deductible IRAs. That lowers their AGI and brings them closer to the max they can receive under the earned income credit. So there's still a lot of possibilities out here, a lot of scenarios, but in terms of if someone was doing nothing, putting money in a MyRA and then getting more money back in the saver's credit, that might be very attractive. One other piece that I wanted to cover, and it's not directly related to MyRA, but I think that we're seeing revolution, I think is too strong a word, but there's a movement among the states, because the states are starting to realize that retirement is going to be an issue, and so the states are making moves into this area as well. California started, I believe, back in 2012 with some legislation, and they're doing kind of a market research to determine what they would need to do to set up retirement accounts for their employees. And all this work is for employees who don't have access to retirement accounts at their employer. So employers would be mandated in most of these plans to provide the state retirement solution, and then sometimes even auto-deduct 3% of their pay to go into this state retirement solution. So California is actually doing research. They're kind of moving very methodically through this process. Illinois moved a lot quicker, and they have what they're calling the Secure Choice Savings Program. And I don't think it's ready to roll yet, but they're taking kind of a similar approach to the MyRA. They're having payroll deductions funding a Roth IRA. So it's almost like a payroll Roth IRA. And so their idea is to mandate that 3% and have the money move right into those Roth IRAs. Just last November, Department of Labor issued some guidance for the states, because there was some question of, well, if a state sets up a state-mandated retirement program, does that run afoul of ERISA? Or are there any state safe harbors from ERISA in these state plans? And so Department of Labor issued some guidance and is trying to kind of clear some of the waters. Because if you go out and look at the states that are interested in this, it's about 20 plus states that are either have passed legislation or legislation has been submitted and maybe it hasn't gone anywhere. So there's a lot of states that are moving forward, and then even more that are kind of watching their peers to determine, how do we kind of solve this retirement crisis. So I don't mean to say that MyRAs aren't useful. They're definitely useful. It's just they are kind of the vanguard of what may be coming from the federal government. They're the vanguard from the federal government of what may be coming from the state governments. So lots of retirement options. It's going to be a very interesting few years as all these kind of accounts and opportunities roll out. So MyRA, it's kind of like your little starter seed tray for your retirement accounts that eventually, after accumulating assets, and then you roll into a private financial institution and a Roth IRA, there they become a really cool looking plant. So that's kind of my take on MyRAs. And I'm done.
Well, very good. Thank you, Andrew. We will be moving to the time for questions and answers. But I do want to share with you that from the federal government level, that we are very happy that we can be, as a network through the Cooperative Extension System, be able to reach numerous employers and make them aware of this opportunity, make them aware of also the concern of retirement, as what Andrew just shared, and how MyRA can be a starting point for many families. One of the things that we're hoping from the federal level is that you will work closely with the Farm Service Agencies, FSA. Maybe many of you have offices that you're sharing with them, but I hope that you become familiar with those agencies in your counties so that you can make them aware of the MyRA as an IRA for employees so that they can get their savings and retirement plans started. So at this time, Elizabeth, thank you for helping with the chat. And I think that some of you have been getting answers in the chat box. So as we go through this, do you have any questions for Andrew and then also Teresa? And Teresa and Andrew, you can dialogue back and forth if you want to a little bit about what was shared. We have about 10 minutes for this discussion.
So one of the things I did notice, I was scrolling through, and like Susan said, I think some of your questions got answered as we went through the slides. But someone did have a question about what would, if you had an employer in your network and you wanted, what would the employer's first step be? And so my suggestion would be, at the end of my slides, there was a phone number to our employer help group, relationship managers, that I would direct them there. They can also send them, that phone number, like I said, was at the end of my slides, but it's 1-844-874-7590. And a relationship manager would be able to like help them figure out what the first step should be. And like I think I shared, and it all depends on what kind of an employer they are, how many employees they have, you know. So, you know, we really are trying to help folks figure it out, like what will work best for their situation. So I would suggest that.
I see Barb Wallen from Iowa said a lot of people are low enough income for the 50% credit. They actually end up owing no tax. That's absolutely true. It's interesting with the retirement savers credit that the group that could benefit the most, the ones in the 50%, the standard deduction, the exemptions from children, all that kind of rolls up, and there sometimes isn't a lot of tax. But a married couple with no kids who makes $35,000, they might have some tax. So it's definitely limited. It's not something you can run around and be like, this is amazing. It's not. But it's definitely something that can reduce taxes, and even the 20% or 10% credit rates are still fairly high. I mean, I think the credit is now up to $60,000 for married filing joint, and so on AGI. So that's quite a lot for a U.S. family, and they might have some tax, and the credit may offset that. So it's not amazing, but it's definitely something. And those rates rise with inflation, so they're only going to go higher.
I just saw another question come in from Karen. So can employers do this even if they already have a regular plan? So yes, the answer is yes. What we are finding is that some employers feel like it will conflict with their plan, and I see what you wrote in your parentheses there, that there are sometimes employees that don't trust their employer's plan, and what that simply means, then they wouldn't even have to go through their employer if they didn't want to. I mean, an individual can come to our website and create an account without going through their employer, because now that we've added the additional funding option of ACH, they can fund their account that way. That'd be number one. But like I said also before, some folks realize that this could be a supplement to what they do offer at work, and we've had employers share the information with their employees, gladly, because they see it as a way for them to supplement what they're already doing with their employer plan. And then I did also notice another question earlier that it said, did it have to be done online, or could it be at a bank or a credit union? So this account is created with, Treasury. It's not offered at a bank or a credit union, and basically it is online, but there is a way that you can create the account over the phone. And if you go to the website, myra.gov, on the home page down at the bottom is it's our contact information for individuals, but there's a 800 number there where folks, if they want to open the account up over the phone, some customer service representative will help them do that. We've had folks we also offer Spanish speakers at the customer service phone desk, and we've had folks call into that number to have a Spanish speaker walk them through the process. So you'll find that on the homepage at myra.gov.
I think I may have introduced some confusion a little bit when I said I have a slide here about watch the states. That was about the state's own independent actions regarding retirement accounts. So the states, they're not rolling out their own marketing of MyRA. They're looking at how can they provide retirement accounts for their citizens. And so for citizens who are employed by businesses that don't have any retirement option. And so it's not that the states are setting up their own MyRAs or marketing MyRAs. They're actually investigating what they can do to help retirement. So sorry, I didn't mean to cause some confusion. I just wanted to say that this is quite a burgeoning field, and there will be more and more movement here to kind of help people save for retirement and those years after they stop working.
Okay, I see that, Elizabeth. Thank you. You restated a question that I missed from earlier. So Wendy asked, if you're currently saving into a 401 or a 403, are you exempt from participating in MyRA? So the answer is no. But one thing you do need to be aware of, there is a yearly contribution limit for a Roth IRA. And so if you have, typically in a 401 or a 403 plan, there may be a Roth component to it, but that yearly contribution does not take into account that your employer-sponsored plan. But it's probably important that you check with a tax professional. But if you had a separate Roth IRA account, and we've found people that do, and like I said, a lot of folks are using this because it's a safe investment as a supplement to other things that they're doing. Even though that wasn't our main goal when building it, but we are, folks are using it for that purpose. But you have to pay attention to that yearly contribution. For individuals, it's under the age of 50, it's $5,500 a year that you can contribute to a Roth IRA. So if you had two Roth IRA accounts, you'd have to, that's a combined. So you couldn't put $5,500 in your MyRA and another $5,500 in the second one. It's combined. But if you're already contributing to a 401, you definitely can also have a MyRA account.
There's a question from Barb about, will the IRS develop a new tax form for MyRAs, or would you use the Form 8888? I believe I've read, and Teresa may substantiate, I believe you have to use the Form 8888. There isn't a special form yet for MyRAs. And the one thing with the Form 8888 is even electronically, there's no double checking. So you definitely want to make sure that you put in those routing and account numbers correctly, because if you mistype and you actually transpose some numbers, that can significantly delay your refund, or the refund won't get to where it's going, or you can actually put your refund in someone else's account, and there's no method to get that back. So if you're going to use Form 8888, triple check those numbers.
Yep, Andrew, that's correct. It's the 8888 form, no special form for MyRA. Just provide the routing number and account number related to your MyRA account.
Barb has a question. Do you think states will continue setting up their own programs now that MyRA exists? I think they will, because the states seem to be set on automatic enrollment and automatic payroll deductions that mandated 3%. I think that they're going to want to have something that they can kind of control and make it more mandatory, more required for employees to save for retirement.
And I see a last one here. Once the account reaches the max, the MyRA account reaches the max and needs to be rolled over into a private sector Roth IRA, does the Treasury continue to manage? No. At that point, the plan that you roll into is your new plan manager. You know, you can look on our website for updates on that. At this time, we have not completely outlined that process, like how it will work, because we know, you know, with the annual contribution of $5,500, it'll, you know, be a little over 2 years before we get folks that are, you know, hitting that limit. And so we've recently, we're trying to gather information from the private sector to just make sure, like I said, we're really trying to like get this right all the way across the board, you know, and talking to professionals and, you know, seeing how things work in the private sector. And but we want to keep those 3 key things in mind every time we add new functionality: simple, safe, and affordable. So, you know, look for how that process will be defined in the future. But yes, when you roll over, it will no longer be managed by the Treasury.
And so,
okay, I see one more.
We have just a couple more minutes, and we have 2 more questions that just came in. So, Teresa, can you answer Barb's and both Barb and Barbara's?
Okay, sure. Do you have to roll it all over, or could you transfer? Okay, so if you're going to do the process of a transfer into a Roth IRA, it's the total balance. But if you wanted to withdraw $10,000 of your contributions, then you could leave the rest in your MyRA and, you know, keep contributing to it. So, and all that will be outlined when we get to that process, defining that process of a transfer. But a transfer is the full amount will go, and then your MyRA account will be closed at that time. But we can follow up if you have any more questions on that. And then the $15,000 limit includes earnings. So you would want to monitor your account based on the earnings that you're getting. It's not just your contributions of $15,000. It includes the interest that you earned. And then lastly, I just see this last one, no penalties for withdrawal, right? Okay, there are no penalties if you withdraw your contributions. There are certain situations that you can withdraw the earnings also. And I would direct you to the website to look at the Roth IRA rules for that to get, you know, more definite information on that. But there are a few that allow you to do that without penalties.
Could you answer then Scott's question, please? it says, what would the penalty be if you went over?
So if you go over the 15,000, so what we have built into the application itself is once your account reaches that 15,000, it's considered closed and it will no longer earn interest. We are building in alerts, and so folks will get alerts as they approach that balance. So look for that as well. That will be part of the whole process that we, define on how the transfer process will work when you reach that balance.
All right, very good. I think, I hate to tell you this, I think we could go on probably for another half hour. This has been just one of the best webinars I've attended. So thank you both, Teresa with MyRA and also Andrew. Again, we appreciate your in-depth research that you did to help explain, and especially I think this visual that you've created with the starting tray will help us explain this then to our different participants, students that we reach. So I know you're writing nice comments. Yes, I agree. It was an awesome webinar. So again, thank you, Teresa and Andrew. Again, I want to thank Treasury for working with us on the MyRA presentation, e-extension, financial security for all, community of practice, again, never lets us down. And thank you, folks, both our chairs of Elizabeth Kish and then Barbara O'Neill. I also want to make you aware that December we have a lot of things going on, and one event I want to just remind you about is Tuesday, December the 8th at 3 p.m. We're having a Twitter chat, and it is the year-end financial planning tips. And I sent this out to both listservs of the Family Econ and the America Saves listserv. And if you do participate in the America Saves conference calls, that conference call on December 8th has been moved up to 2 p.m. Eastern Time so that we can participate in the 3 p.m. Twitter chat. So thanks again, everyone. I hope you have a wonderful holiday. And Elizabeth Kish has been so busy working in the background here. So thanks, Elizabeth, for keeping the Twitter chat going. Or not Twitter chat, our webinar. So I just read your message about Twitter chat. So I do want to share, too, that this will be posted on e-extension Learn site. And we think that it will probably be Monday is when it will be posted. So again, have a great weekend and happy holidays. Any presenters?
Thank you very much.
Yes, same here. Thank you.
Have a good day. Thanks.